IREN investors, you have been warned. We are going to jump into the top 10 most efficient AI neoclouds, and you're going to love this if you're an IREN holder. We take a look at a great way to see which neoclouds are monetizing scarce AI power most efficiently right now and where the remaining upside still sits. Yes, we've seen massive moves from like NBIS and others, and IREN has been quiet over the last year, but I think there's going to be a massive catch-up trade. Nvidia dropped some news for IREN today as well. We're going to take a look at all of it in today's video. I appreciate you all so much for finding us back here at the channel. Make sure you do subscribe. We're on our way to getting this channel monetized. It's been a grind on this one, but we know we have a lot to offer on this channel. We've talked about a lot of the AI build out, and it has come to fruition. IREN was just on an amazing discount. We were scooping that up around 32 bucks. It's now trading at 45. I think it's on its way to 50 and beyond here very, very soon. And let's get into the video, guys. You do not want to miss what we're picking up and throwing down here today. So Shabe Balour had a really good post, and I want to highlight it. He had a really good post on X talking about the 10 most efficient AI neoclouds. So if I just scroll down to the chart itself, you could start to see where we are here. So these are the top 10 neocloud and AI HPC providers ranked by contracted revenue per megawatt. Remember, power here is one of the scarcest assets with this AI build out, and contracts are the proof. So the revenue per megawatt is who monetizes it best. So if we look at contracted revenue per megawatt, IREN is number one at 40 million right now. Their total power platform is 5 gigawatts. And if you look at kind of where they are compared to the rest, I mean, they are just head and shoulders above many of these other names. And I like a lot of these other names on here. You know, I own TeraWulf. I've owned Nvidia. I own Cypher, TeraWulf, Cypher, IREN. I also have owned Applied Digital in the past. I did trade it. Might be getting back into that play. And there's some great names here. I mean, Core Scientific, CoreWeave, Galaxy. I mean, some great plays, right? But when we look at this, IREN leads the group at 40 million of contracted revenue per megawatt, which shows how valuable its full stack GPU cloud model can be once more of its secured power actually gets monetized. And then you look at Galaxy with 29 million per megawatt. CoreWeave is in there. Applied Digital, TeraWulf, Nvidia. A lot of these names are going to be similar in this regard. And again, this is only one way to look at it, right? It's not the only way to look at it. However, you look at IREN's expected revenue over the next several years in the billions. I mean, look where we are today to where this projection puts us by the end of the decade. And this is what I've been saying for a very long time. I mean, IREN here, still sub $20 billion market cap. Any type of pullbacks, I want to be accumulating IREN. And this guy put it well, free from Matrix. IREN's only plus 18% in 2026. And that's after securing Nvidia and Perplexity. Meanwhile, Horizon 1 just started unlocking. 120 million quarter this month. By year end, 4 billion plus ARR. A company adding billions in recurring revenue while the stock is up only 18%. Now compare that to Nvidia. Nothing against Nvidia, he said. The demand for compute is real, and I think NBIS can continue to grow. But after the run NBIS has had, where's the better risk reward from here? That's the question. And I agree with this take. If you look at the annualized stock performance, you know, in 2024, IREN had the lead. 2025, IREN had the lead. And in 2026, I mean, this is just way too heavily weighted to Nvidia. Now, we may even see a catch up here in the back half of 2026. But I agree with the take here. Like where we are right now, I'd much rather get into IREN and Cypher for that matter over Nvidia, just given the performance that we've seen and how much IREN and Cypher both have lagged behind here so far in 2026. Now, there are some other kind of ways to look at this as well. Mike Alfred, somebody who I follow on X, listen to, have talked to, and talked with on Spaces, like many others, his portfolio is basically just heavy. Cipher, IREN, Open Door, making up a massive chunk of his top 10 positions. And so he too believes Cipher and IREN, great long-term bets, but also that they're probably best positioned for a catch-up trade here as well. So I want to get into this Nvidia news today as well. Actually, here's a good post too. Institutions' inflow on IREN is wild. Look at this. Bank of America, State Street, Morgan Stanley, Deutsche Bank, BlackRock. This isn't retail chasing candles. This is real money building positions. Goldman Sachs shows 20 million share call position. The single biggest line in the whole filing. Sounds like a monster bullish bet, but it's not that simple. The 20 million isn't shares Goldman bought. It's the underlying shares their call options control. They've got common shares and puts as well. Calls and puts in near match size. Same story with Citadel. That's what a dealer's book looks like when banks and market makers sit on both sides. They're facilitating client flow and hedging inventory, not making a directional call. The real conviction is the long-only lines up top. That's where money is being committed, not hedged. So a lot of people just, believing that IREN is very, very well positioned here. But if we go over to the Nvidia news that came out, I thought this was fascinating. I mean, Nvidia actually posted about IREN here. Congratulations to IREN on achieving Nvidia exemplar cloud status. This validation reflects close engineering collaboration and gives enterprises confidence that demanding AI workloads can perform reliably at scale on IREN's AI cloud. This is a company that I've owned for a good while. And I currently have a pretty decent sized position, but I wanted to add more. I should have bought more on this recent dip, to be honest with you. I'm still in a pretty good spot here. I've got about 155 shares right now in my Robinhood portfolio, which is one of my kind of, ones that I actively manage. And it's up about 14%, not bad at all. I would have liked to add more in the $35 range. We did add some to lower our cost. Our average cost used to be about 50. Now it's down to 40. And I really don't care too much about this because this is, a now to the end of the decade minimum type play for me. So I'm not overly concerned with where I get in. Obviously, I want to get in heavier on dips. And we've seen just a great snapback here in the last month, up almost 20% since these lows of like $30. And I just think there's so much more coming down the line here for IREN. And I think it's the catch-up trade. I think it's one of the plays, you have to take over some of the competition, just given that year-to-date performance of only 17% versus some of these other competitors. So I appreciate you all for watching the video. Let me know your thoughts down below. Make sure you do subscribe for more, and we'll see you guys in the next video.